Investors and traders, welcome to the channel. Market chart pattern today is 18th of October 2024. Hope everyone is having a great day and start to the weekend. And I wish everyone will have a prosperous and peaceful weekend. So we'll be taking a look at the key markets for the U.S. marketplace. This is going to be a video number one for the U.S. key markets, in which we'll mainly cover the U.S. dollar, the bond markets using the Treasury futures and notes, and gold and silver. And that's all we'll cover in this video. And then the video which will be coming out on Sunday, we will be taking a deeper look at the equity markets and also the sectors. So I just want to split the video into two, because that way I will have more time for the Sunday video. As always, this video is for educational purposes only, and it is not a financial advice. So let's start by taking a look at the 2-year Treasury note. And this one, after hitting the 38.2% retracement and after achieving our targets all the way down to 3.9% and going a little bit beyond that as well, finding a good support from structure here, it is in a trading range now. But the momentum does appear to be for the yields to actually move lower for the 2-year Treasury note. And they're kind of, in my opinion, before the Fed meeting that takes place in November. These are likely to remain more of a range-bound affair, but it does appear that you can see this big move down here. That sideways to down is the preferred direction for us. And then if we take a look at the Treasury note, this is the 10-year Treasury note. This is a really big market in futures market to trade, very liquid as well, and the 10-year is the kind of duration which is used for a number of purposes. So credit card loans, they use it; auto loans, they use it to mark and come up with their interest rate structures. They use it as a benchmark for their calculations, whatever they have to do. And what is really important is that it is holding this 38.2% retracement for pretty much the entire week. And last Thursday, actually, when we had the jobless claims data come out, we saw this market make a retracement. But the key point is it has held this 38.2% retracement of the lows going back all the way to October 2023. So it's on a daily chart, more of a double bottom pattern. As long as 38.2% is not broken to the downside convincingly, I'm of the opinion that we are likely to see the price move higher. In other words, the yields on the 10-year likely to move lower. It is more easily seen on this long bond futures chart, because we have this nice pattern formation that I'm showing here in the orange shaded area. And what we can see is that you can see 14th of October when the week started, and when the trading week has ended on 18th of October, this has held 2 times. So potential double bottom right at the 38.2% retracement, and we also have this 1.618 extension of the CD leg with comparison to this AB leg, this line segment. So in my opinion, bonds are likely to actually resume the rally to the upside, as long as this is not broken with the downside, which is 38.2% retracement. Remain bullish on the bonds. And then if we take a look at the TLT, which is 20 plus year duration bonds, similar sort of pattern to the 30-year long bond futures, and look at this nice trend line. It has been held thus far this week as well, so interesting one to note. Now let's move to the US dollar. US dollar pretty much did what we were expecting it to do after it broke above the 38.2% retracement around 102.60. It's gone up a little bit to 50% retracement, and we have the structural resistance from here and from here. This is what we discussed in the previous video, and what we have seen an inside bar formation took place on Friday 18th of October. It did not take out the lows of yesterday, which is Thursday 17th of October, so remains an inside bar. However, it is a bearish close for the day. So what it means is next week we'll have to look for price action. If it begins to take out the lows of the 17th of October, this is going to give us a follow through the downside, and we could easily expect a retracement at least to this blue little line which we see around here. That's where it could form a target, but I'm expecting the dollar to remain more of a range bound affair. The preferred direction is to the downside, and it completed our all these patterns in which we had been talking about, but what it is really doing is that it found support from structure around here, so it has rallied quite a bit, 50% of its move, which is where the fair value is for this commodity. And now it's likely there is a chance that it will actually pull back a little bit right here. What will be really interesting is if we just do a 38.2% retracement. Here we go, which is a little bit lower than this little line, so around 102.25. If it found good support from here, then we could be looking on ABCD, which could actually take it back up here around 106, so top of the range. That possibility is there. Um, but the preferred direction for the dollar is actually to the downside. But on the weekly chart, the key point is this 99, 98, and 99 levels. As long as the excuse me, the price remains above it, then what is likely to happen is it's going to remain a range bound affair. So we toggle between 100 and 107. That remains the range. However, it breaks to the downside, breaking the 99, especially the 98 level, then it could decelerate down rather pretty quickly, and we could have a target as low as 92 on the US dollar index. Now let's have a look at the gold market. So as the dollar actually went lower today, what we saw was gold, which has been really strong. So we began to actually mention that when the 10th of October it did a engulfing bullish engulfing candle formation right here, and it's gone right to the 1.272 expansion, which we had as the shorter term target for when we did the video on last Thursday. So the likelihood is 2765 is the next spot for it. And just a reminder on gold, I think this week I will do a special report on gold, because what we are seeing is actually a really strong market, and we had some really long-term patterns completing around here as well, but this momentum is so strong we are likely to actually move higher, and psychologically I believe the next target is around 3000. So really interesting what is happening in this market, but this market is not alone. What is also happening is silver is catching up as well. This is really interesting because the silver in comparison to the gold market has been much weaker, but what we are seeing is today especially a breakout of this range. So our you must have remembered that we were watching for this level as the ABCD in red, and then that was completed. Then we had further targets of 33.85 as high as 35.30, and looks like the market is actually going for these targets because already achieved the 33.85 today. So here we go. Today was a fantastic move, plus 6.45% in silver. That's great. And we achieved this target, which also completes or is really close to completing this black ABCD. But I think there is a fair chance if the momentum continues the way it has last this Friday, 35.30 is possibly also achievable. And we also saw this kind of bullishness come into some of the mining stocks as well. So this is the Pan American Silver Corporation, and here we have this ABCD which completes around 2660. So it looks like this market is actually moving towards this target to complete this ABCD and perhaps even higher as well. So I have not drawn the expansion of this move. Let me actually draw the expansion, and here we go. So on the expansion move, yeah, so this is 2660 most likely, possibly even a little bit higher, around 28 as well. And then of course we have the highs come in from April of 2022, and if the market is actually able to get above this swing point, that is going to be very bullish for this stock. So this weekend I will do a special video for gold, silver, and we'll take a deeper look at many of these equities for silver and gold miners. Okay, now let's take a look at the British pound versus the US dollar. And the British pound is actually today a little bit stronger against the US dollar, as the US dollar we saw on the dollar index was closed lower. What we have seen is the market actually respect this 38.2% retracement, this one, and for 2 consecutive days. But further confirmation probably is needed, because this swing 16th of October swing high has not been taken out. So if it begins to take this high out, then the chances are we might have seen a pretty good, possibly even a double bottom around here, and this could actually go right in here and at least go and close this gap formation by getting into this gray box, which is quite a while from where it is right now. And this is gonna be, I believe, right between the 50% and the 61.8% retracement. It's likely to get into this region if it's able to get above the highs of 16th of October, and then particularly take out the swing high of 15th of October. Now Euro USD, we can see that it has retraced right to the 61.8% retracement of its entire low of 17th of April 2024 to the highs of 25th of September. And today has been an inside bar, but closed positive for the day. So we will be watching this spot, because it is also a trend line right here. There is a possibility that what we are looking at in terms of US dollar actually weakening from here, which will actually strengthen the euro versus the dollar. Now USDJPY, here we go, and this is the one which we had been watching. After forming this pattern formation, a really strong move, it completed its ABCD, then it has gone into this wedge pattern formation, and it's just been pretty. You can also look at it as some sort of a channel formation, but it is a wedge in my books. And you can see two ways trading here: bullish day, bearish day, bullish day, bearish day. Now if it actually takes the bottom part of this wedge out, it's gonna be like a dynamite. So it is then likely to actually strengthen against the US dollar. So the US dollar weakness most likely coming for us. Now I think we have covered pretty much everything. We have covered the bonds, we have covered the gold and silver, the major currencies, and then I think I've covered everything. And then what we'll do is uh, wait for the video coming out on Sunday, and we'll take a deeper look at the equity markets, equity indices, and some of the sectors as well. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.